Assalamualaikum, my name is Fbmklci and my group members are Danish Shazani, Muhammad Jashimi and Muhammad Kamal Muzamil. This video is prepared for Dr. Amin Razaluddin for our research presentation. Our research entitled The Impact of Macroeconomic Variable toward Fbmklci performance in Malaysia. This video presentation will include the discussion on background of the study, literature review, research methodologies and findings, and conclusion and recommendation. Background of the study. The stock market is a place for the activity for the buy and sell stock that are listed on the stock exchange. Investor and financial institutions that enter the stock market with the objective to gain return on investment. In relation to this, the stock market index is primarily often used to evaluate overall stock market. In Malaysia, Fbmklci is the major index which comprises of 30 largest companies by market capitalization. Thus, investors often use the KLCI index to forecast the future trend of the stock market in Malaysia. Problem statement. The stock market plays an important role in country economic performance. It means that the performance of the stock market will be an indicator to reflect current economic condition, trend, as well as public confidence toward economic performance of the country. So, what makes macroeconomic and Fbmklci have a correlation? This is an interesting thought and idea to determine whether it affects on KLCI index or not. Also, this study will assist investor and foreign investor in understanding the inflation KLCI movement based on macroeconomics and thus help them making a decision to enter the stock market. Okay, the most previous study has mostly focused on determining relationship between macroeconomic and stock market in developed countries. Meaning here, there are minimal research conduct on the effect of macroeconomic variable toward stock market in developing countries such as Malaysia. Furthermore, the majority of the prior research journal concentrate more on common macroeconomic variables such as the inflation rate and the exchange rate that would likely affect the market return of the KLCI. Thus, this study will widen the past literature on macroeconomic elements that may likely have relation on the KLCI performance with using additional variable and the most recent data. The research objective in our study is firstly to investigate the relationship between interest rate and Fbmklci index performance. Secondly, to investigate the relationship between inflation rate and Fbmklci index performance. Thirdly, to investigate the relationship between money supply M2 and Fbmklci index performance, and lastly to investigate the relationship between the industrial production index and Fbmklci index performance. Now let's move on with the chapter 2. Okay, the relevance theory. The theory that we use and applicable to our study is arbitrage pricing theory. This is because it is most widely used approach for research on connecting the macroeconomic to the stock returns. Furthermore, arbitrage pricing theory is more advanced version of the capital asset pricing model (CAPM), in which the systematic risk is not the only factor determining the rate of return of the stock, but it also includes and add other components that could affect the stock return, such as macroeconomic variable.
Assalamualaikum and hi, my name is Danish Shazani and I will be continuing with the literature review. So let's start with the Fbmklci. So Fbmklci, the Kuala Lumpur Composite Index, acts as one of the indicators that is being used extensively to observe the stock market performance in Malaysia. Fbmklci Index provides investors with a basic interpretation of Malaysian stock market performance, where 30 largest companies have been listed in the main board of Bursa Malaysia. The listed company consists of full capitalization and multi-sector companies. Next is the macroeconomic variables, we'll be starting with the interest rate. So in general, interest rate are known as the cost of capital, which is the fee charged for the use of capital over a given time span. And from a viewpoint of a borrower, interest rate is the expense of borrowing money, and from the perspective of a lender, interest rate is the price charged for lending the money. So interest rate is actually determined by a nation's monetary policy in relation to the nation's economic situation. So for the interest rate, a previous study on KLCI return and interest rate from the year 1997 until 2015 failed to reveal a significant relationship between both of the variables. So next is the inflation rate. So inflation rate is the continuous growth of common products and services price level in general. So inflation rate can also be counted as an indicator to measure whether the country's economic condition is stable or not, as high inflation may cause bad outcomes as the people's purchasing power is declining as well as the currency. So for the inflation rate, the previous study that we have found is that inflation rate and stock price in Malaysia was found to be negatively correlated between both of them. Next is the money supply, which is the M2. So money supply is recognized as a broad measure of available money and determines the total amount of monetary assets accessible in the company. The money supply, the M2, consists of the money market account balance, certificate deposits, and the foreign bank deposits. So for the money supply, there is actually a positive relationship between the money supply and KLCI. As in the previous study, it shows that increased money supply leads to increased demand among common people, pushing the KLCI. So for the final variable is the Industrial Production Index, or the IPI. IPI is actually a monthly index that measures the performance of the economy's industrial market, which is divided into three sectors, which is the construction, mines, and electric and gas utilities. So IPI will raise the profit of the industries and corporation through the increase in the production in the industrial sector. So when real economy increase, it will also increase the production and the revenue, where this will lead to increase in profit. So in the previous study, there is actually a significant impact on market return found in past research between the KLCI and IPI. Moving on, we have the research methodology. So we will start with the purpose of study. Our purpose of study is to find the relationship between Fbmklci index performance and the macroeconomic variables such as the interest rate, inflation rate, money supply, M2, and industrial production index. So in order to better understand the volatility of macroeconomic variables that may impact the performance of the Fbmklci for the investors to estimate their future direction of the stock market. So our type of study that we use is the causal study, which is the explanatory research, to see if changes in the independent variables can affect the performance of dependent variable. So our data collection method is that our data is gathered from the year 2010 and until 2020, which is 10 years, on a monthly basis. And our secondary data is that we collect our data from ICON, Bank Negara Malaysia, BNM, and the World Bank. Next is that our test consideration for the data analysis. We use the descriptive analysis, normality test or Jagbera, correlation, autocorrelation or Durbin-Watson, and regression. Next is the theoretical framework, where the four macroeconomic variables, the interest rate, inflation rate, money supply, and the industrial production index, act as independent variable, while the Fbmklci will act as the dependent variable.
Warahmatullahi wabarakatuh. I will present about the chapter 4. So from this chapter, we will try to see the result from the statistical analysis on the collection data. So we decide to use 5 kind of test, which is a descriptive analysis, normality test, correlation test, autocorrelation test, and also the regression test. And let's jump to our first test, which is descriptive analysis. So for descriptive analysis, we wanted to see the mean, the median, the max and minimum amount, the skewness, and also the repetitious. So for example, let's see for the KLCI. So as we can see that the KLCI, for the KLCI it shows that the mean and the median is recorded as 7.4, and for the maximum and minimum it shows that the KLCI have a lower spread, since the maximum is 7.5 and the minimum is 7.1. And for the skewness, it shows that the KLCI has a negative skewness level at negative 0.76, and for the criticism it shows that the KLCI has the heavier tail than the normal distribution because it is more than 3. And to conclude the descriptive analysis, it concludes that the M2 has a higher mean than the others, and the IR has the lower mean than the others. Inflation rate has a wider range of maximum and minimum value, and it is the only variable with a positive skewness. For the IPI is a variable with a shorter tail than the typical distribution, and for the Curtis's conclusion is that the IR is a variable that has a longer tail in this research. The second test is normality test. So basically we use a normality test to see and to identify if the data is normal or not normal distributed. And for this normality test we use Jacob-Bera to test the normality. And for the as a result, here we can see that Jacob-Bera recorded as 3.22, and the probability for Jacob-Bera is 0.994. Which is larger than the 5% significant level. So here we do not reject the null hypothesis, and this indicates that the data is normally distributed and the data can use for various tests. So for the next test is the correlation test. So we decide to use this test to measure the significance and also the correlation between the variable. So for this test we use the 5% significant level, two-sided test, and we compare the absolute value, which is 1. So for the interest rate, we can see that it has a weak positive correlation to the KLCI, and it is significant to the KLCI since the p-value is less than 5%. And for the inflation rate also have a weak positive correlation, but it not significant to the KLCI. This is due to the p-value is larger than the 5%. So for the M2 has a negative, weak negative correlation to the KLCI, and it is still significant. And also for the IPI result also have a weak negative correlation and have a significant towards the KLCI since the p-value is less than 5%. Next test is autocorrelation test. So we use this to detect the serial correlation problem. So we use the Durbin-Watson test, and it consists of 3 regions. We use a 5% significant level also. So for the Durbin-Watson result, as we can see, is 0.120. It is lower than the lower Durbin 1.592. So this indicates that we reject the HO, which means that it has a serial correlation problem, and it is a positive correlation. For the last test is a regression test. So for this test we use a 5% significant level with two-sided, and the observation involved is 132. So the critical t-value is 1.960. So as we can see here, the t-statistic for the IR is larger than the critical value, indicate that it was significant. And also we can see that from the probability, it was less than 5%, indicates that it has significant. It was significant towards the KLCI performance. And for the inflation, we can see here that it is not significant since the t-value is less than the critical value. And for the money supply also, it was significant, and for the IPI also is not significant. According to the R-squared, it tells that from this test it only contributed the data only contributed 10% towards the KLCI performance.
Okay, I will explain for the chapter 5. For the conclusion of the main finding, interest rate has a positive and statistically significant. Interest rate is the only significant in this study. The result is where when interest rate increase, it will has a strong impact on good performance of KCI, and this is opposite from the some research that mention interest rate increase, the KCI will decrease. From the research, the reason of positive is mainly due to the change in macroeconomic factors such as economic prospect. It also due to the certain industry that company most related to interest rate such as bank sector. And lastly, our research is on long term, and some of the research mentioned that the positive relationship happen in long term basis and not a short term. And for the inflation rate, the result is has a positive relationship and statistically insignificant with the Fbmklci performance. What has been mentioned in the past research, inflation rate could be negative and positive relationship with the stock market. The reason of positive relation is because of government start to control properly the inflation rate after the financial crisis. Besides, it also due to the consumer price index and not producer price index, where CPI is consumer purchase good and service, and PPI is overall output producer. When consumer increase their purchasing power, it mean they have a money to invest in the stock market. Lastly, as I mentioned before, we are on long term basis with 10 years analysis. This happen in long term basis also. Supply, it has a positive relationship with statistically insignificant. Money supply also has a positive and negative impact with the stock market. The positive relationship but insignificant might impact on equity value due to the economic activities, which is increase in money supply. The increase in money supply will drive investor to rebalance their portfolio in stock market. Again, this is also due to the long-term data. Lastly, the industry production index has a negative relationship with statistically insignificant with the Fbmklci performance. This is a bit fishy because industry production index is measure the output of production. When production is increased, it will increase the growth of company, and company has a value. Therefore, investor would like to invest in this company. However, the negative relationship is might due to the different industry, where not all industry are affected by industry production index. And some of researcher also has mentioned that monthly data seem to be lacking on and extremely poor, that might give negative relationship. And again, it also due to the long-term data. Okay, as for the limitation of study, we found that we have a limitation on different frequency and value. We are using a monthly data, and some of the value is on currency, percentage and index. Having a different value, it make us a bit hard to compare the variables, and the result seems not in line with the economic theory. Then we overcome by using an LN method on both independent and dependent variables. And for the second limitation is on resource of data. We are difficult to find the accuracy of data and monthly frequency on this variable, and not all variable in one database, because most of the database is on annual data, and so we are using a different database so that we can identify more accurate and having on our monthly data. And for the KLCI restriction, the KCI is only consists of 30 largest company in Bursa. The issue that the result might not be applied as overall, since it only consists of 30 companies. It's supposed to take consideration on other companies to have a perfect result. Next, we go for the implication. So the first one is investor can use the result to determine the stock performance if there are change in macroeconomic events such as increasing in interest rate. Investor need to alert if there are change in any monetary policy that might affect the KCI performance. And the second one is for the government and policymaker. They need to have a better understanding on concept of the relationship between macroeconomic performance and stock market to make sure the stock market have a positive impact when there are change in any macroeconomic variables. And lastly, the implication is for the future research, where it can use this research as a guidance and using another and more variables. Future research also can use a different statistical test to find more results. Finally, the recommendation for the future research, we suggest to include more independent variables. In this study, we use only 4 independent variables, and only one of them is significant, which is interest rate. Including more variables, it will help future research to get more significant results. And the second recommendation is to utilize other macroeconomic factor. Most of prior research are using the common macroeconomy, which is interest rate, GDP or inflation rate. By using other macroeconomic, it will make this research topic more wider and have different results. For example, it can use consumer confidence index or wage index. And lastly, for today, the future research also can use a different data frequency, which is annual, quarterly, or weekly data. For our research, we are using a monthly data. The frequency has a different sensitivity, especially on economic variables. For example, exchange rate is more sensitivity on daily because the rate is changed on daily.